Hi, my name is Meryl Yelen. I'm a director in PwC's National Tax Practice. Today we're here to talk about PLR 2017-16002 involving an interesting spin-off ruling. Now here, of note, U.S. parent and distributing members of a consolidated group engaged in a complex series of transactions. Parent contributed cash and convertible notes to distributing, and as part of an overall plan, U.S. distributing distributed to its creditors in satisfaction of its indebtedness a variety of forms of consideration. As part of the overall transaction, distributing thereafter merged with and into a disregarded limited liability company of parent. What matters here and what happened? So, in connection with this transaction, the taxpayer made two representations involving the fact that distributing was in Title 11 bankruptcy and that the overall plan occurred pursuant to the bankruptcy plan. Why does that matter? Presumably, the distributing company wanted to get into G reorganization treatment rather than D reorganization treatment in connection with the 355. Normally speaking, the 355 continuity rules don't provide creditor continuity in connection with a 355. So the taxpayer here had to fall within the 368 rules in order to receive the continuity of interest ruling that it received. Also, the IRS interestingly ruled that they applied the 368 continuity standard and used the 40% threshold of continuity rather than what we typically think of as 50% continuity in a 355 transaction. Additionally of note was that the IRS applied some form of step transaction doctrine from a 355D perspective. And so instead of looking at U.S. parents' contribution of property to U.S. distributing as a 355D violation, they took into account the merger into distributing LLC to eliminate that purchase basis. Now, if you're a taxpayer who's not in the G reorg context in bankruptcy and want to potentially evaluate these transactions in connection with a normal D355 transaction and see whether the IRS would issue similar type of rulings, I've listed here Derek Kane, who leads PricewaterhouseCoopers National Tax Private Letter Ruling Practice, and here's his phone number to reach out to. Thank you very much, and if you'd like a more detailed discussion of these issues, please see this month in M&A. Take care.